Okay, let's dive in. There's some pretty significant news that landed this morning. Seems like a temporary break in the, let's call it, tariff tango
Yeah.
between the U.S. and China.
That's right. It looks like an agreement was reached in Geneva. This was Monday, May 12th, 2025. And it's basically a 90-day pause on some key tariffs.
Pause.
And it's already making waves, especially if you're keeping an eye on the tech markets.
Exactly. So our mission today really is to understand what's going on with this tariff sort of timeout.
Yeah.
We want to look at which tariffs are being put on ice, how the markets reacted literally right away, and, what the ripples might be.
Ripples for the tech world, and maybe even for you, for the things you buy or your investments.
Right. And we're mainly looking at a report from TechCrunch to help us sort through this.
Okay, so let's get into the nitty-gritty. What exactly changed? What tariffs are we talking about for these next, 3 months?
So the big headline is the U.S. is temporarily shelving that really high 145% reciprocal tariff on goods coming from China.
145%. Yeah, that was hefty.
Huge. And they're bringing it down, way down to 30%. But, key point, only for 90 days.
Okay, down to 30% for 90 days. And what about China? What are they doing in return?
Well, they're kind of meeting the U.S. partway. China's pausing their 125% tax on goods coming from the U.S.,
Uh-huh.
and they're cutting that down to just 10%. Again, same 90-day window.
Right, 10%. So both sides are dialing it back significantly, but you mentioned it, and it's worth stressing again, this is temporary. 90 days.
Definitely.
It's not like these tariffs are gone for good. It feels more like maybe a chance to talk or just, cool things down for a bit.
Absolutely. And the markets. They didn't waste any time reacting. This morning, pre-market trading, things got pretty interesting. What jumped out at you first?
Well, the first thing was just this general, positive feeling, especially around tech stocks. U.S. tech, Chinese tech seemed like good news all around.
Okay.
But when you dig a bit deeper, some specific stocks really took off. You look at Chinese exporters like Temu and Alibaba. They're both on the NASDAQ. They jumped almost 9%.
Wow, 9%. Hey, that makes sense, though, right? Lower tariffs hitting the U.S. market, that's got to help their bottom line directly.
Exactly. It makes their products cheaper, potentially boosts sales almost immediately.
But why do you think they jumped, so much more than some of the big U.S. tech companies?
That's a good question. I think it probably reflects just how direct that impact is for them. Temu, Alibaba, their whole model is largely based on exporting to the U.S. So lower tariff, boom, instant potential benefit.
Right.
For the big U.S. tech firms, their operations are way more complex, global supply chains, all that. The benefit might be there, but maybe it's a bit less immediate or direct in the very short term.
Okay, yeah, that makes sense. And speaking of those U.S. giants, we did see movement there too, didn't we?
Oh, absolutely. Big names, think Apple, Amazon, Tesla, NVIDIA, AMD, even Meta, companies that really rely on China for making their stuff or getting components. All of them saw their stocks jump roughly, 5% to 6% in pre-market.
5 to 6% is still pretty significant. It just highlights how tangled up these tech supply chains are with China.
Totally. It suggests the market is thinking, okay, maybe lower costs for parts, maybe better profit margins for these guys, at least for these 90 days, if the savings, actually materialize.
And it wasn't just individual stocks, right? What about the broader index?
Yeah, good point. NASDAQ futures were also up noticeably around 3.8%.
Okay, and just quickly for anyone maybe less familiar, NASDAQ futures, that's basically a hint about how the NASDAQ index is expected to open.
Exactly. It's like an early indicator. So that 3.8% jump suggests a wider expectation that tech stocks in general were heading for a positive start.
So clearly, markets like the news. Thumbs up all around. But there's something missing from this deal, isn't there? It's not quite the whole picture.
Yes, that's a really important point. What's not included here is maybe just as interesting as what is. You're thinking about the U.S. de minimis rule, I assume?
That's the one. Yeah, this temporary tariff pause, it makes absolutely no mention of bringing back that de minimis exemption.
Why?
And just to remind everyone, that was the rule that basically said if you imported something valued under $800, you usually didn't have to pay duties on it.
A lot of online shoppers buying smaller things directly from overseas benefited from that.
Exactly. So the fact that exemption is still gone, that's significant, right?
It really is. Because it means even with these specific larger tariffs being lowered, those smaller packages, the under $800 ones coming into the U.S., they might still face duties they didn't face before the exemption was removed.
Huh. So it could still affect, say, smaller online sellers or individuals buying directly, even while bigger companies get some relief on larger shipments.
Precisely. It just shows how many layers there are to this trade stuff. This 90-day pause fixes one big issue, but it doesn't solve everything that's currently, in flux.
Yeah, good point. And this whole situation, it's not happening in a vacuum either. The TechCrunch piece we looked at, it briefly mentioned some other related things, kind of reminding us that trade disputes, tariffs, they're always simmering somewhere.
What did they mention?
They brought up that Starlink contract issue in Ontario from earlier this year. Remember that?
Yeah.
It got canceled, then reinstated, and U.S. tariffs were apparently part of the protest initially.
Oh, right. Yeah, that was messy. It shows how these trade things can spill over into other areas like government contracts, international deals.
Definitely. And it also touched on the EU thinking about tariffs against Chinese electric vehicle companies. That was back in late 2023.
Which tells you it's not just a U.S.-China thing. It's global. Concerns about competition, subsidies, market access, they pop up everywhere.
And they even referenced way back in 2019 how markets got really nervous because of Chinese tariff retaliation and, well, even presidential tweets at the time.
Yeah, that volatility, it's a good reminder of how sensitive markets can be to trade policy shifts and just how uncertain things can get, sometimes very quickly.
So, yeah, while everyone seems pretty happy about this pause right now,
Which is understandable.
it's important to see it in that bigger context. It's complex, it's ongoing, and things could definitely change again after these 90 days are up.
Absolutely. Connecting it all. This 90-day window, it's going to be really interesting to watch. Is it like a genuine first step towards sorting things out more permanently? A chance for some real talks?
Yeah.
Or is it just kicking the can down the road for 3 months before the same old tensions flare up again? We just don't know yet.
Okay, so let's try and wrap this up. Key takeaway. We've got this temporary truce, a 90-day pause on some major U.S.-China tariffs. And the immediate reaction. Pretty positive, especially for tech stocks. Companies tied closely to China, whether U.S. or Chinese, saw some nice bumps.
Definitely a sigh of relief in the markets, it seems. And it's a significant, but remember that limitation.
Right. The de minimis exemption for smaller imports is still gone. That wasn't part of this deal. And it could still matter for certain types of trade.
Yeah, that aspect remains unchanged.
So looking ahead, here's something for you, our listener, to think about. What factors do you think will really decide if this 90-day pause turns into something more stable? What needs to happen for this not to just be a temporary blip?
And maybe also beyond just this specific U.S.-China deal, what other big global things, economic shifts, political events, what should you be watching that might sway how tech stocks perform over the next few months?
Definitely some food for thought there. Lots to keep an eye on.